It's about that time of day again. Welcome back to our nightly newsletter, boys and girls. Joseph James here. Tuesday evening, August 2nd, 2016. Got some great trends and some pretty big ranges to work with tomorrow. Crude oil is bearish while the S&P, gold, and euro are bullish heading into Wednesday's trading session. I have another great newsletter for you guys and gals tonight with plenty of reliable trading opportunities setting up tomorrow. But before we jump into our charts and take a look at the plan for tomorrow, I want to remind you the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the newsletter video right now on our YouTube channel, not to worry, there's a link in the description of the YouTube video. Follow that link. Come join me here on the blog at Sideways Markets for the full-length version. And while you're here, don't forget, if you're not a member here at School of Trade, I got a free pass for all my guests out there. Grab your free pass in the upper left-hand corner if you're not a member of our trade room yet. Lower left-hand corner, don't forget to register for the mailing list. I'll send you an email every evening when our nightly newsletter is ready. Join the mailing list in the lower left-hand corner. And then also, don't forget, you can also download the charts you see me using in tonight's video. Grab those charts by following that link below the video tonight. That we'll have those charts ready for you tomorrow. And as I always remind you guys, you're going to learn more with me in 1 week on my free trial than you will anywhere else on the interwebs. Join the trial membership on the right-hand side of the blog. And also, I'm always here standing by 24/7, 365 to answer all your questions. Hit me up using that live support button on the side of the website there on the right-hand side. I also have a live support button on the homepage of our website at SchoolOfTrade.com. So grab your free pass, join the mailing list, download those charts for tomorrow, and join the free trial where you can learn all the who, what, where, when, and why about everything that is being a student here at School of Trade. Hope you guys have a great week here so far. We got a busy week here. We got Non-Farm Friday coming right around the corner. But tomorrow we have Inventory Wednesday, especially if you're a crude trader or if you're an S&P trader. Wednesdays are always going to be a definite opportunity here for some big moves. First things first, though. We get some major news just a few hours away coming from Japan and China. 7:50 p.m. tonight, 9:45 p.m. and 10 p.m. Eastern Time. We have news from the Bank of Japan. We have news from General Services PMI from China. And, of course, the PMI composite from our good friends in Japan as well. So that should get things moving pretty quickly here in the Asian session. And then we go right into the early part of the London session tomorrow morning. We've got a lot of Red Star news starting at 3:50 and going all the way until 4:30 a.m. tomorrow morning for all you traders in the London session. Don't forget to come out and join us in our chat room tomorrow morning for the London Trade Room session. Right, London trading session tomorrow morning. Again, opening up at 3 a.m. Eastern Time is when London starts. And, of course, we got a bunch of news starting out tomorrow morning at 3:50 a.m. That's definitely going to shake things up in London. We got a little minor report there from retail sales, not expected to be the big mover tomorrow. Another report at 8:15 tomorrow morning from the ADP employment report. Again, those are minor news reports for tomorrow. It looks like the big news tomorrow, though, is going to be either early in the London session or later in the day. We have the petroleum status report at 10:30 a.m. Eastern Time. And keep in mind, if you're trading crude oil or really the S&P tomorrow, the S&P has also been kind of a follower of crude oil over the past 7.5, 8 months now. So be aware tomorrow morning we have, again, the major news in London and then a little bit of minor news, and then the major news to finish up the morning at 10:30 a.m. Eastern Time from the petroleum status report. As I always say, tomorrow is inventory day, so give it 15 minutes before the news comes out. Typically, we'll get very slow before the inventory report comes out tomorrow, and then give it at least 10 minutes after the inventory report comes out before we go touching crude oil. It's always important that we trade around this news event if you're trading crude. And again, don't be surprised if you see a pretty good reaction from the S&P as well, because that, of course, has been shadowing crude oil over the past few months as well. So 15-minute heads up tomorrow morning before 10:30, so cut off at 10:15, and then about 10:40, you should be able then to find some reliable opportunities after all the volatility subsides and we can find some trends. Don't gamble on that news report tomorrow morning at 10:30. It's always a common mistake that new traders make, trying to get in on the volatility around the inventory report. But the reality is there's lots of volatility, but there's very little liquidity, which means your stops are not going to hold. The knife cuts both ways. You can make a lot of profit, but you can lose just as much. And of course, we have so many tradable opportunities every day. It just doesn't make any sense gambling away your money in your account by trying to grab or trying to harness that volatility for the news tomorrow. So be aware, late tonight in Asia, and the Australian session tonight, coming out of the Bank of Japan and China. Tomorrow morning, we have the major news starting at 3:50 tomorrow morning in the Eurozone. And then, of course, we go all the way down to 10:30 a.m. for the petroleum status report. Don't forget, we'll be in our chat room tomorrow morning for the London session. We'll be in the trade room tomorrow morning for the U.S. morning session. I look forward to seeing you guys there as students here at School of Trade. Let's kick this thing off here now. We got crude, S&P, gold, and the euro. Crude oil is bearish and bouncing off the measured move target this evening, and we assume that sellers will be looking for opportunities to send price back to the lows tomorrow. Just as expected, buyers got a short-term opportunity to start the session this morning before the sellers took back control and ran price down to new monthly lows. We're back in those 30s again, as you can see. As price bounces off the lows, we know that this is clearly a bear market, and we will focus on selling back to those lows until the buyers can prove they have control by holding a pullback. Just like earlier today, the buyers can hold a pullback and make a run back to the battle zone up at 40, but we assume that this is where the majority of long-term sellers will be waiting around the high of that pending bear channel tomorrow. We have news at 10:30 tomorrow morning, so that will really be the only real variable for tomorrow. Right now, the buyers have a nice bounce off this measured move. They will be looking to hold the pullback to take control here, but of course, sellers will be waiting to see if they fail for a move right back down to the low. This is a classic scenario. We saw the same thing last night, right? We had a big, strong bear move down. The buyers were able to take a bite out of that move, right? Holding that pullback, but then, of course, they couldn't hold. Buyer failure, hold the pullback, and all the way back down again. This is ultimately kind of a preview of what we're expecting again for tomorrow. Very simple rinse and repeat here. We get this bounce off the lows. Buyers need to hold that pullback for a move going back up to those highs. Once we get back up to the high, we then expect to see long-term sellers at the high of this bear channel. We expect to see long-term sellers at the battle zone above that 40. I was going to mention the big round number at 40. It's not that big of a deal. It is historically a pretty important number, but as far as intraday trading goes, we just want to simply make sure that we're aware that it may get choppy around that 40. If it does, it will turn into a trading range, and we'll deal with that live in real time tomorrow once we know more about that tomorrow. But again, right now, though, we are in bounce mode off of that measured move. As this price goes higher, buyers are looking for that breakout pullback to hold up to the target overhead. At that point now, we do assume that long-term sellers will be coming in. And so, of course, with that said, buyers need to get and hold above that trend line, right? In my opinion, the buyers should get an easy opportunity here in the short term. Possibly, if they can get two there, it's, again, like we saw today, we saw that new higher high. They had one good shot there to buy that pullback before things all fell apart once again. So expect more of the same on that. Again, as we go higher, buyers got to hold the pullback. Then they can take this price back up all the way up to that battle zone around 40. And then again, watch closely here as we go higher here, because as this price gets into this battle zone, this is where the buyers have to push through, hold that pullback for a run up to that 40.91 target overhead. So really, in my opinion, same thing we talked about last night. Buyers will have the short-term opportunity holding the pullback, and then another opportunity if they can hold above that battle zone and above the kind of that pending bear channel high. Just be careful if you're a buyer, though, buying into that high or buying into that, what I call the battle zone above that 40 to 40.31. What about sellers? If you're a seller right now, you're looking for those buyers to fail. The problem, though, is we have this rising support trend line right now. that trend line really has potential to be a big pain in the butt for all those sellers, because even if the buyers can't hold here, right? Even if they can't hold, they still have that trend line to worry about. So the safest bet here for the sellers, if the buyers can't hold this pullback, is to get a breakout pullback of their own. Use that support trend line as resistance, and that, of course, will be the most reliable way to sell, getting below the support, turning into resistance, and then, of course, the target is going to be back down at the measured move, down at the trend line, and the double down target waiting at 38.79. Also, if it goes higher here, you want to be thinking about this here for tomorrow. If we do see the buyers hold this pullback, I will not be surprised whatsoever if the bulls hold this pullback. Big, strong move down. We're going to see some profit taking. Nice bounce off this. It is fueled by the API news report tonight. But again, I won't be surprised one bit to see, like we said today, right, that two-legged move, holding the pullback, getting at least a short-term move up to those highs. But then here's where it gets interesting. Once we get back to those highs, this is where you really got to be careful trying to go in on a buyer failure. There are going to be two opportunities once we get back into the battle zone. First one is going to be buyer failure. Remember, by the time we get back to the battle zone around 40, by the time we get back to the high of that channel, this will be in the hands, at least in the short term, for the bulls. The bulls will have control of this market. So trying to sell with buyer failure, definitely going to be an option. It will be the more aggressive option. What I really want to dig into, though, is for that next pullback. That's where the sellers really want to get their teeth into that, right, as it pulls back and holds that moving average. So buyers trying to hold the pullback to take control for themselves. If they're successful, then we know, just like we saw back here, right, just like we saw back here, lower low, hold the pullback, and go. That's what we're looking for if the buyers do have their way up into that 40 to 40.31 area waiting overhead. That's about all we can see right now on crude. Bears definitely own the day. The bulls own the hour. The bulls have to prove it. If they can't prove it, the bears will keep selling into buyer failure. The only concern we have with the failure right now is getting below that trend line and using it as resistance on the opposite side, or waiting for those buyers to hold the pullback and then get that price right back below that moving average again, so we can find the long-term sells going lower. We have to assume in an overall bear market, and we saw a lot of this today in the trade room, we have to assume as this price goes higher, sellers are waiting to scale into this, right, to find an opportunity to build into a large position, right? Large lot traders are going to be scaling into this move, knowing that the odds are very high that we get back down to that low tomorrow. Until we can get and stay above this trend line overhead, once we can get and stay above that trend line overhead, then the buyers can start doing some damage tomorrow. Other than that, though, got to be really careful buying into resistance here. And remember, we have inventories tomorrow morning at 10:30 a.m. Sit on those hands from 10:15 to 10:40, and then batten down the hatches as we expect to get a pretty volatile reaction tomorrow at 10:30, 10:35 a.m. from the inventory report. Now, speaking of the inventory report, the S&P will also be impacted by the inventory report. Don't ask me why. It just goes to show how shameless traders can be. They'll use anything to find an edge. And over the past 8 months, ever since the beginning of the year, we've seen the S&P 500 kind of act as the shadow for crude oil futures. So we do expect to see the news tomorrow on crude have an impact on the S&P. Don't say I didn't warn you. Even the S&P is bullish after the buyers successfully held their pullback, but the overall trend is bearish, and they need to hold through the battle zone if they want any chance to get back up to those highs. This is very similar to what you'd almost expect out of crude oil. A little bit different because we don't have a falling major channel to work with, but as you can see, the buyers have a nice bounce. They've held their pullback, and now they're gunning for, right? They're gunning for this, right, this battle zone waiting overhead. It won't be until the buyers can get and stay above that battle zone that they'll really have some wide open spaces here, right, to get this price potentially all the way back to the highs. The buyers have short-term control. There's a bullish wedge this evening, which tells them to look for pullbacks to support with a target up at the battle zone overhead. Sellers need to be patient right now because the buyers have control. waiting for an opportunity to get a new lower low and hold a pullback of their own with a target back to low tomorrow. Very similar to what we just talked about on crude oil. Don't forget about inventories tomorrow at 10:30 a.m. because that may also cause some unexpected volatility that we need to be aware of for tomorrow. As you can see, this market pretty consistently bearish all morning today, all day today pretty much until right at the end of the session. They got their double down target.